Hello and welcome to today's update. Today is 22nd of October. You're looking at a daily chart of S&P 500. S&P 500 had a very good day yesterday. It was up almost 2.5%. So was NASDAQ 100. It was also up almost 2.5%. There was a big rally, and the rally was because the bond yields pulled back on Friday. So let's start off with the bond yields and see what happened there, so we can understand what happened in the stock market and what is likely to happen in coming days. So we're going to start off with the Fed funds futures for April. So it was down 13 basis points to close at 4.87. Now the Fed funds futures on Thursday traded as high as 5%. On Wednesday and Thursday, the yields have been backing up. And then on Friday, they pulled back. They were up in European hours, but then when the US session opened, they pulled back. They pulled back after some comments from Fed officials that they have started to think about slowing the pace of the rate increases. So there was an article on Wall Street Journal where it says that the Federal Reserve will increase interest rate by 75 basis points in November, and then there's also debate as to what would be the size of the future increases. So as a result, the yields fell because the market is kind of expecting that the Federal Reserve is coming towards the end of their rate hike cycle. After the end of this year. So if they increase interest rate in November by 75 basis point and another 50 basis point in December, the Fed funds rate would be around 4.5%. Now the Federal Reserve at the last FOMC meeting said the terminal rate is around 4.75%. So in 2 weeks' time, after the next FOMC meeting in November, Federal Reserve will provide some guidance as to where they see the terminal rate to be. But I don't believe that the terminal rate would be above 5%. I think the maximum would be 5%. They'd leave it there for a while and let it work through the economy. And as a result, I think the yields are now near the top end. Fed fund futures reach 5%. The 2-year, which rose as high as 464, closed down 13 basis point at 4.48%. So was 10-year. 10-year traded as high as 4.3%, 4.33% on Friday, and then they pulled back. And once yields started to pull back, that's when the markets started to rally. And if the yields are near the end, I think they could pull back a little bit, but we'll get more clarity on in a couple of weeks' time. Coming back to the stocks, so all the stocks wanted was yields to basically not go up, and they rallied strongly. S&P 500 2.5% after 3 days of pullback. Big green day on Friday. If we look at the weekly chart of S&P 500, you'll see that it's been forming a base at the weekly 200 period simple moving average. And then this is where, if you look at the line chart, this is where it formed a double bottom. So this is a positive pattern, and it suggests that there is more room to the upside. So let's discuss what are the possible levels that the market could go to. The first level would be, this is S&P 500, would be around here. So this is around 3,800. So this is when this will also bring the 50-day moving average in play right here. So this would be the near-term resistance. If it's able to get through this level, then next level would be right here, which is around 3,900. So those would be the near-term levels. And beyond there, if it's able to get through this, there's quite a bit of space for it to move, and eventually, the 200-day moving average will come into play. But we'll just see how it gets through the 38 and 3900. You can see the momentum indicators have started to move higher. You can see RSI is now making higher high, similar to what we've seen right here. When it bottomed in mid-June, when the last rally started, you can see RSI was making a series of higher high and higher lows, and that's exactly what we see it doing right now. So obviously it needs to carry on further. It has closed above the RSI 50 level, so which is positive. MACD has also started to move higher. Back in mid-June, MACD crossed, and then it continued to move higher and went above the zero line. So right now MACD is still well below the zero line, so we want to see it get back above the zero line. That would be quite positive. As far as the price is concerned, it closed above the 20. The 50 would be the next level. Overall, this is now looking positive. You can see that it has the shape of a inverted head and shoulder. So that suggests that if it can get through this one, this would be kind of in the neckline. If it gets through this level, then quite a bit of space opens up ahead. So we'll see how things play out, but it's looking positive. For NASDAQ 100, similar pattern. So formed a base around 10,950 level. So it closed just above the daily 20 moving average. The next area would be the daily 50-day moving average, which is around 11,600. And that also brings this area, this previous high in play. And if it's able to get through this level, then this level will come into play, which is around 12,000. And after that, there's quite a bit of space right here for it to move and test the 200-day moving average if it wanted to. Momentum indicators are moving higher. You can see RSI is now moving higher. MACD is crossed and then moving higher. MACD is still below the zero line, so we want to see MACD go above the zero line, something like this here, and that would be quite positive. So overall, chart is quite positive. If we look at the levels to watch out for SPY, so the first level would be the 50-day moving average, which is around 380, 381, and then this level right here, which is around 390. So those would be the near-term level. Support for would be right here around 360, 364, and then obviously 348, which is the previous low. For QQQ, so near-term resistance would be around 283, which is this high and the 50-day moving average, and then it would be this level around 292. Support, obviously, the previous low around 255. Momentum indicators are moving higher, so overall this is looking positive. If we look at some of the individual stocks, well, let's look at dollar first. Dollar fell almost a full point, DXY. That's because the yields pull back. So that's why dollar fell. Dollar remains within this channel. It can pull back to the bottom of this channel, and the uptrend would still be intact. Momentum indicators have started to move lower. You can see MACD is heading lower towards the zero line. RSI has started to move lower. So it looks like dollar can pull back maybe to the bottom of this channel, and that would support stocks moving higher. Dollar weakness means that gold is going to be strong. Gold formed a double bottom right around 1625, and then if I look at the 4-hour chart, you can see that there was a downtrend. It broke through this downtrend, so gold is looking positive right now. So it can gradually move up. So initial resistance would be around here, around 1700, and then the top of this, which is around 1775. I think as long as dollar remains weak, gold can rebound. Momentum indicators are also moving higher. RSI is made a higher low, so it's now moving higher. It is still oversold. Stochastic is an oversold area, so it looks like gold can rebound a little bit further in coming days. If we look at VIX, VIX fell 0.29. VIX is not doing much. It's kind of within this bigger range, 20 on the downside, around 37 on the upside. So it's coming towards the middle of this range, which is around 28. So if it falls below 28, then it will basically close below this level, which it tested, which acted as a resistance before and then support. So 28 would be the support. You can see the momentum indicators are weakening, so it can pull back. If it closes below 28, then that would suggest that maybe there's a little bit more to the downside. If we look at some of the individual stocks, so we'll look at Apple first. So Apple had a great day. It rose 2.71%. It closed right at this previous high right here on around 147. Now, if I look at the weekly chart of Apple, I think the weekly chart is looking positive now. If you look at the line chart, you can see that it formed a W pattern. It's a double bottom pattern. This is a positive sign. So that suggests that maybe there is a little bit more to the upside. Now, Apple reports earnings next week. I think next week all the major tech companies will report earnings. We've got Microsoft and Google on Tuesday, Meta on Wednesday, and Amazon and Apple reports on Thursday. So Apple's earnings and the tech earnings in general will provide further guidance as to whether or not market moves higher. If the earnings come in above expectation, that should provide additional support to the overall market, and Apple too. So this would be the near-term resistance. If I bring in the moving average just to see, so the 50-day moving average is right here. If it's able to get through the 50-day moving average, then the 200-day comes into play. The 200-day is now around 157. So that would be the levels to watch out. So 50-day moving average, if it's able to get through, it's around 150. Then the 157 comes into play. The momentum indicators have started to move higher. So so this is looking positive. And obviously earnings will make a significant difference to whether or not it can make further gains. Tesla, it formed a double bottom right here around 205, so it's a little bit lagging behind. I mean, I would have expected Tesla to really be up 6-7% on a day when Nasdaq was up almost 3%. But it's still trying to form a base here. It's still recovering from this massive decline. The resistance would be around 230, which is the high of this candle, and then these moving averages come into play. I think it can go up and retest these moving averages, the 20 moving averages, as well as the 50. The 50 days around 255. So I would expect Tesla to move up and challenge these moving averages. If we look at Amazon, Amazon will be reporting earnings next week, next Thursday. So it's also kind of formed a inverted head and shoulder pattern right here. So it's moving higher. If the overall market moves higher, I would expect Amazon to move higher as well. If it's able to get through this 50-day moving average, then this 200-day moving average comes into play. You can see the 200-day acted as a resistance in mid-August. So that would be, so Amazon could retest this level again. But again, that would depend a lot on the earnings. If the earnings are positive and above expectation, so it could very well challenge this level. Microsoft, again, it was up 2.5%. So it also has been moving higher with the overall market. The next area would be the 50-day moving average, which is around 250, and that's where this previous high comes into play. And above there, there's quite a bit of space before the next key resistance, which is the 200-day, comes into play. You can see the 200-day again acted as a resistance. So that would be the next major challenge. So the earnings are positive. They report on Tuesday. If the earnings are positive, we could see Microsoft gradually move up towards the 200-day moving average. But if it's negative, then obviously all bets are off. Then we may have to revisit this previous low. So we'll see how things play out after the earnings release. Google also reports earnings next week, so it's kind of going sideways right now. But a positive earnings means that perhaps it can break through the 50-day moving average, and there's quite a bit of gap until the 200-day comes into play. The momentum indicators are also moving higher. So overall, I think the big techs are looking positive. I think if overall market can move a little bit higher, we'll see these guys also go up as well. So the next week will be challenging. Earnings come out, and then next week we've got two economic reports: the GDP report and the PC report that comes out later in the week. And the week after that would be the FOMC meeting. So there's a lot to digest over the next couple of weeks. So we'll leave it here. Thank you very much for watching the video. Please consider subscribing, sharing. I hope to see you again in future video. Thank you very much.